Hello everybody, and thank you for watching the Wealth Guard Show. I'm your host, Tom White. Coming up, we'll have a look at our IBD 50 portfolio from this week, and we'll see how we did. Each week, the worst performing stock gets sold, and a new stock is added to the portfolio. First, we're going to do our economic mechanics this week, and we always start off with three key principles. And our first key principle, first, the US dollar and commodities move in the opposite direction. That makes sense since commodities are priced in dollars. And two, commodities and interest rates move in the same direction. And when I'm talking about interest rates, I'm referring to the 10-year Treasury yield. And third, high interest rates, they're bearish for stocks. And so we'll begin with the US dollar. And first on the US dollar, down below, point 1 shows where we got the stochastics. They were in overbought territory and they've started to fall. Just got a bullish signal though as the black line has crossed over the red, and we gave this one a green mark. And point 2 above that, we see that the MACDs, they're beginning to converge a little bit, but they're still rising. And the histogram bars, they're falling, but they're still positive too, so we gave that a yellow mark. And up top, point 3, the relative strength index. It's been flatlined for a while. It's heading up as of recently, but it's still flat, so we gave that a yellow mark too. And over on the weekly chart, things still look strong. Down below point 1, the stochastics. We were oversold on the dollar for a while, and we got a real bullish signal. We've been rising ever since. Gave point 1 a green mark. And above that, point 2 shows we just got confirmation of those stochastics where the MACDs, black line crossed over the red, and the histogram bars rose above 0. Both are bullish, so we gave that a green mark. And point 3 above shows where we got a bounce on the relative strength index, and it appears to be headed higher. Gave that one a green mark too. And so summing things up for the US dollar, we analyzed the daily charts and the weekly charts. Over on the daily charts, we found the stochastics were positive, so we gave that a green mark. MACDs and relative strength index, they were neutral, so we gave those a yellow mark. Over on the weekly charts, we found the stochastics, the MACDs, and the relative strength index were all positive, we gave all green marks. For a total, we got 0 red marks, 2 yellow marks, and 4 green marks for the US dollar. And now let's take a look at the commodities represented by the CRB Index. And on the daily chart of the commodities, down below, point 1 shows where the stochastics have been oversold for a while, and they've just got a bullish signal and appear to be trying to break out here, but have yet to do so. They're still in bearish territory, so we gave it a yellow mark. And above that, point 2 shows where we got the MACDs. They're starting to level off a bit here. And the histogram bars, they've been rising, but they're still negative, so we gave that a yellow mark. And up top, relative strength index is flat. Looks like it's starting to form a base here though, so we gave that a yellow mark too. And over on a weekly chart, things don't look so good. Stochastics are still in steep decline here. They look bearish still, gave that one a red mark. And above that, point 2, the MACDs, they're continuing to confirm the stochastics as the black line has crossed over the red. That's a bearish signal. And the histogram bars below, the blue bars, are still in negative territory, gave that one a red mark. And up top, point 3, relative strength index, it's still in decline. We gave that one a red mark too. And summing up the commodities, we analyzed daily charts and the weekly charts. Over on the daily charts, found the stochastics, the MACDs, and the relative strength index were all neutral. They improved a bit, so we gave them all yellow marks. Over on the weekly charts though, things were looking real bad. Stochastics, the MACDs, and the relative strength index all negative. Gave them all red marks. And for a total, we got 3 red marks, 3 yellow marks, and 0 green marks for the commodities. And we'll take a look now at the 10-year Treasury yield. And on a daily chart of the 10-year Treasury yield, down below, point 1 shows stochastics breaking out from oversold territory here. We got the black line crossing over the red. That's bullish. We gave it a green mark. That should also help the commodities since they move in the same direction coming up next week. Above that, point 2 shows we got the MACDs. They're flat. And the histogram bars are flat too. They've yet to confirm the move in the stochastics, so we're still going to watch that closely. Gave it a yellow mark. And up top, point 3 shows we're starting to base here with the relative strength index, so we gave that a yellow mark too. And over on the weekly chart, much like the commodities, down below, point 1 shows stochastics. They're still in steep decline. Yet to show a sign of recovery, gave that one a red mark. And above that, point 2 shows whether we still have the confirmation in the MACDs. They're continuing lower too. And the histogram bars. Those blue bars are still continuing lower as well. We gave that one a red mark. And up top, relative strength index. We can see the downtrend forming there. It looks bearish. Gave it a red mark. And summing up 10-year Treasury yield, we analyzed daily chart and the weekly chart. Over on the daily chart, we found stochastics were positive. They were the first to move. We gave it a green mark. MACD's and relative strength index, they were still neutral. Gave those a yellow mark. And on a weekly chart, stochastics, the MACD's and the relative strength index, they were all bearish. Gave them red marks. For a total, got 3 red marks, 2 yellow marks, and 1 green mark. Let's take a look now at the Dow Jones. And the daily chart, down below 0.1, stochastics look like they're in recovery. Got the black line crossing over the red. It's a bullish signal, but we're still down low in bearish territory, so we gave it a yellow mark. And above that, 0.2 shows that the MACDs are still in decline, and histogram bars, they're not looking good either, so we still gave that one a red mark. And up top, 0.3 shows the relative strength index. It's starting to form a trend lower as well. We gave that one a red mark. And on the weekly chart, down below, things aren't looking good. Stochastics, they're in overbought territory, and we just got a bearish signal as the black line crossed over the red. Gave that one a red mark. And above that, 0.2 shows the MACDs are confirming the stochastics. The black line did cross over the red, and the histogram bars fell below 0, so we gave that a red mark. Up top, relative strength index, we can see that peak is lower than the last peak, and we're headed lower. We gave that one a red mark too. And summing up the Dow Jones Industrial Average, we analyzed daily charts and the weekly charts. Over on the daily chart, stochastics were neutral, gave them a yellow mark. And on the MACDs and the relative strength index, they were negative, we gave those a red mark. Over on the weekly charts, we found things weren't looking good at all. Stochastics and MACD relative strength index were all bearish, gave them all red marks. For a total, we got 5 red marks, 1 yellow mark, and 0 green marks for the Dow Jones. And so we've been coming up with scores for the US dollar, the commodities, 10-year Treasury yield, and Dow Jones, looking for the relationships and finding where the strengths are and where the weaknesses lie by looking for the number of positives and weighing them against the number of negatives and coming to a conclusion that way. And in first place this week, we found that the US dollar came in with 4 green marks, had 2 yellow marks, and 0 red marks. And over on the 10-year Treasury yield, we see that came in second place. We had 1 green mark, 2 yellow marks, and 3 red marks. And in third place, it was the commodities. We had 0 green marks, 3 yellow marks, and 3 red marks. And in last place, not looking good at all, we had the Dow Jones Industrial Average, 0 green marks, 1 yellow mark, and 5 red. And we take a look now at our market gauge. The object here is to be as far in the right column in bullish territory as possible, and as far away from the left column in bearish territory. And in first place this week, we see we had the US dollar. It slipped a bit. It was screaming bullish last week, but it did have a couple of neutrals on it this week. And in number 2, we got the 10-year Treasury yield, which has improved this week. It's heading into neutral territory, followed by the commodities, represented by the CRB Index. And that's just right behind it. We can see the relationship there, as we know that commodities and interest rates move in the same direction. And we also know that commodities and the dollar move in opposite directions, so you can see them converging on each other. As well, we got the Dow Jones in last place as things continue to look worse. Looks like coming up this week, Dow Jones, we're going to start out, it looks like perhaps positive, maybe early part of the week here, Monday or so, but I think the sell-off is going to continue here as things are not looking good at all on the weekly charts, and looks like looks pretty bearish, so expect a down week on the Dow Jones. And we begin now our IBD 50 portfolio. Let's take a look at our holdings going into the week. First off, last week in first place, Tempur Pedic. Got 46 shares of that stock, starting the week out at $2,947.22. Altera Corp came in second place last week with $2,125.20 starting out the week. And it was Edwards Lifesciences, $2,118, third place last week. And Polypore International knocking out El Paso Pipeline, starting the week out here, $2,653.20. And it's JK Solar, Jinko Solar. Got 66 shares of that stock last week, the new addition to the portfolio, starting out the week there at $1,881 even. Carrying cash in a portfolio of $149.83. One of these stocks, the worst performer, is about to get sold, and a new stock is getting added to the portfolio. Let's see how we did. And coming in first place this week, our number one performer, it's Polypore International. And Polypore International started out the week at $66.33 and closing the week at $68.69. Total gain to the portfolio of $94.40. Good enough for first place. Let's take a look at the chart. And on the chart of Polypore International, down below point 1 shows stochastics. They've been in overbought territory, but just got another bullish signal as the black line crossed over the red and they're reaching higher. Gave it a green mark. And point 2 above that shows the MACDs. They're bullish, they're continuing higher, but the histogram bars have dropped a bit, so we gave that one a yellow mark. And up top, point 3 shows we look like we could be leveling off under some resistance here on the relative strength index, so we gave that one a yellow mark. And our number 2 performer this week, it's Edwards Lifesciences. And starting out the week at $88.25 and closing the week at $88.43. We had a paltry gain of $4.32, but a gain nonetheless. Let's take a look at the chart. And on the chart of Edwards Lifesciences, down below point 1 shows stochastics. They look like they could be turning here and heading lower. They are overbought. We gave it a yellow mark. Going to watch these closely. And above that, point 2 shows we're starting to converge on those MACDs. Black lines moving in on that red line. And the histogram bars, they're sloping downward. It's still bullish though, so we gave it a yellow mark. And up top, point 3 shows relative strength index. It's been flatlining. Looks like it's dropping a bit here too, so we gave it a yellow mark. And coming in, number 3 this week, it's Tempur Pedic. And Tempur Pedic, our strongest performer in the portfolio, opening the week out at $64.07 and closing the week at just $64.05. 2-cent loss on the stock, 92-cent loss in the portfolio. Let's take a look at the chart. And on the chart of Tempur Pedic, down below, point 1 shows stochastics. They look like they're tiring a bit here. They are in overbought territory, so we gave it a yellow mark. And point 2 above that shows that the MACDs, they're continuing to slope lower, and the histogram bars are in negative territory too, so we gave that one a red mark. And up top, relative strength index, it continues to go sideways, no clear direction there, so we gave that one a yellow mark. And so that only leaves room for one more stock in the portfolio. One of the stocks is going to remain, the other is going to get sold. The first stock up, it's the new addition to the portfolio, Jinko Solar. Battling it out against Altera Corp. Coming in number 4. And remaining in the portfolio, it's Altera Corp. And so Altera Corp survived the portfolio, knocking out the new addition. Opening the week out, $48.30, closing the week at $47.77. A loss to the portfolio of $23.32. Let's take a look at the chart. And on the chart of Altera Corp, down below point 1 shows stochastics. Just got a bullish signal there. First ones to move here. Black line crossed over the red, reaching higher, gave it a green mark. And above that, point 2 shows MACDs, though they're continuing lower, haven't confirmed the stochastics yet. And the histogram bars, they're still negative, gave it a red mark. And up top, point 3 shows relative strength index, maybe leveling off here. It's been going sideways, gave it a yellow mark. And so Jinko Solar is out of here. And starting out the week at $28.50 and closing the week at $24.59. We had a big loss, $258.06. That's the reason why the portfolio was down this week. Let's take a look at the chart. And on the chart of Jackass Solar, down below point 1 shows stochastics. They continue in decline, gave it a red mark. Point 2 above that shows confirmation as the MACDs. Black line crossed over the red and they're headed lower. Histogram bars, they're diving too, gave that a red mark. Up top, 3, Relative Strength Index, look at that, it's falling too. Gave that one a red mark. Not looking good for Jinko Solar. And so our final results this week, it was Polypore International coming in first place with a $94.40 gain. And Edwards Lifescience came in second place with a $4.32 gain. Tempur Pedic, 92-cent loss on that one. And Altera Corp survived the portfolio, knocking out Jinko Solar. Had a loss on that one, $23.32. And of course, last place, it's Jinko Solar. Total loss there of $258.06. Still had that cash, $149.83. And so we get a new stock in the portfolio. And this week, the new stock is Hansen's Natural. And Hansen Natural closed the week at $69.56. Got a market cap about $6.15 billion and trades about 835,000 shares per day. Manufactures alternative beverage drinks, including energy drinks, fruit juices, smoothies, and natural soda. Let's take a look at the chart. And the chart of Hansen's Natural looks pretty strong here, down below 0.1 of stochastics. Got a buy signal a while back early in May, and black line crossed over the red, and it's been continuing to climb higher since. Gave it a green mark. And 0.2 above that shows we got confirmations. The MACDs also gave a buy signal, and the histogram bars are lifting up higher too, so we gave that a green mark. And up top, 0.3, the Relative Strength Index. It's been climbing and trending much higher, so we gave that a green mark too. And heading into next week, we got our number one performer, Polypore International. We got $2,747.60 in that stock. And in second place, Edwards Lifesciences, we got $2,122.32. Third place is Tempur Pedic, $2,946.30 there. And Altera Corp surviving the portfolio, we've got $2,101.88. Hansen's Natural is the new addition to the portfolio. Picked up 23 shares of that stock at $65.99. Got a total value there of $1,599.88. Carrying cash in the portfolio, $212.89. And a total value of $11,730.87. Now, we started this portfolio on January 28th with only $10,000. That means we're up right now about just over 17.25%, down from 20% we were up 2 weeks ago, but still, we're hanging in there pretty good. Things are looking pretty strong. And you know, these stocks have got to perform or else they're out of here.